You're listening to session 4 of Angel Insights, brought to you by SyndicateRoom. And I want to start this very special episode of Angel Insights by saying a huge thank you for all the support in the opening episodes of the show. Everyone here at SyndicateRoom are so glad you're enjoying it, and for more educational investing resources, head on over to www.syndicateroom.com. But onwards to today's show. I'm so delighted to have Karam on the show. Samer has been investing since 2005, with investments in the US, Asia, Scandinavia and the Middle East. If that wasn't enough, he's also founder of Seeqnce, that started as a founder collective providing advisory events and organisation workshops. However, due to their incredible success, Seeqnce started their own accelerator in 2012, and they are also now advisors to the Central Bank of Lebanon's $400 million sovereign startup fund. So, ladies and gentlemen, without further ado, may I introduce Karam. Fantastic. Well, Samer, welcome to Angel Insights. Can you start off the show today by giving us a little background about you and how you made your entry into the tech and investing world?
So I dabbled in a bit of computer science and human-computer interaction at a younger age, and eventually got involved in setting up Lebanon's first entrepreneurship department at a very large organization, regional organization in the Arab world. And from that, I was inspired to set up my own startup, and that startup was decently successful. We shut it down in 2009 due to funding constraints, and after that, I started getting involved in building Lebanon's startup ecosystem, one building block at a time, and now I am managing Lebanon's image as a startup destination and a startup investment hub, preferably for an international market, but more specifically for a regional market, and I do that as part of my role at StartUp Megaphone.
And you've seen, obviously, hundreds of startups in your time. What would you say is the dominant reason, then, that startups fail?
Well, I'd say two things. Primarily the team. What happens is sometimes the team is not either cohesive enough or not on the same wavelength or not committed enough or not experienced enough. And so once the cracks start showing, it becomes very easy for it to fall apart, especially under the heavy stress environment of the startup world.
And when investing, for you with the team, is there anything you look for in particular?
When you're looking for a team?
Yeah, so do you look for technical co-founders?
Well, the technical is very important. Complementary roles is also very important. But predominantly, you want people who are willing to go out of their way to get things done. What some people have coined as grit, G-R-I-T.
Okay.
That's not that common in people, especially when you take into consideration that most people are affected by their external environment, and external environments tend to be very fluid once you leave home or you leave college. And so the real world is a very tough place. And creating a startup in a tough place means that you really have to have a lot of grit and stamina and toughness to make it through.
And then the second?
And the second is funding. So being in an environment where funding is not particularly available or not designed to be venture-driven, meaning that it's low-risk funding, most of these startups, even if they have a good team, can end up running dry and basically struggling to grow at the pace they need to grow to remain competitive. So even if you have the ultimate team, if that team is not willing to move to the ideal location, which I think is, it's important to not assume that everybody's going to move to Silicon Valley. If you assume that not everyone's going to move to the ideal location, then you have to take into account that the constraints of their current location may limit their capacities, even if they are the best team that there is.
But you would suggest moving to founders to move
I had the option to move and I didn't, so I wouldn't suggest moving. I would suggest doing whatever one would feel is right to them. if everybody moves to Silicon Valley, then the whole world will dry up and you'll end up with just a lot of brilliant minds in one place. And there's also the opportunity of being in an emerging market that it cannot be found in Silicon Valley. So there are the challenges of funding and other constraints, but there's also the opportunity of a market that is completely untapped. Whereas in the Valley, there are thousands, if not tens of thousands of startups all competing for the same space.
And talking of those reasons for failure, what can angel investors then do you think, to minimise the chances of these happening?
Well, angels, it's interesting because angels are like startups, especially in emerging markets. They have to learn how to invest as angels. And once they do, they become a bridge between the high-risk environment of early and seed-stage startups to the lower-risk environment of growth-stage startups. And in the growth stage, there's always someone somewhere in the world willing to invest in that startup. But in the early and seed stage, very few people are willing to invest outside of their comfort zone and their geography. So the angels would come in as local players, propping up startups in their communities in manners that nobody else would do, would attempt to invest simply because it's just their space, their environment, their comfort zone, and they're willing to take that risk in a place that they're familiar with.
And what's the angel investing environment like in Lebanon?
Not that active. Interestingly enough, we are working. I founded one of the not very active, but I'd say the most active, which doesn't say much, angel scene in Lebanon, which was at the time coined as Beirut Angels. I co-founded it with the former Minister of Telecom, and we were able to raise within a span of, I believe, 3 or 4 months, something like $750,000 from a handful of angels.
Congratulations!
It was a very successful one-time run, but it was the largest angel activity that the country had seen since ever.
So would you say that was a syndicate style?
It was a syndicate style. It was done along those lines with the learnings of Angel List and all the things that I had looked at and participated in previous years. But it was successful because there was a density of high net worth individuals that participated in the pitches. And we got, I'd say, maybe a 5 to 10% participation, which is very high.
Yeah.
So the conversion wasn't too bad, and within the right structure and the right kind of momentum, you can turn a lot of these HNIs into active angels.
And what are your thoughts on group investing then? Do you think it's an effective strategy?
I mean, it follows the same concept of basket investing. You don't want to put all of your eggs in one basket, and you don't want to put all of your money in one investment. So generally, what tends to happen is you have many angels participating in one or more startups, and they do that in order to ensure that they're not one making a bad judgment call, because if others are participating, then that kind of gets sorted through, and it also allows them to create a network of people that they can count on for follow-on rounds and to continue participating in similar or different investments.
And when investing in a big group of people, what do you think individuals should look for in fellow investors? Are there any skill types?
As an angel, you need to look for people who are not going to be counting the pennies.
Okay.
People who are not looking for short-term returns, and people who understand that this is a very, very high-risk, very long-term investment that if it pays out, should it ever pay out, it will be interesting, but the chances of it paying out are very, very low. And hence you are looking for people who are willing to make those 10 to 20 investments in order to make sure that one of them gives them a 10 to 20x return.
And what do you think then is the biggest kind of value add that an angel can bring?
Higher risk, appetite for higher risk, appetite for getting their hands dirty, for getting closer to the startup, getting to know the people individually, it's a very intimate relationship. Your first investors tend to be very, very, very close to you. It's less of a transaction and more of a partnership. And so you're looking for a partner, effectively.
And how do you think angels can achieve that balance? You said that they're getting your hands dirty. How can you achieve that balance of getting your hands dirty but not intruding?
Like any mentor, a mentor is always there to give advice and to guide, but never to lead and direct. Because if you lead and direct, then it's your startup. It's no longer someone else's startup. And what generally happens is that angels tend to work through lead investors that have a rotating responsibility. So no one angel leads many rounds. It's in specific angel leads 1 or 2 rounds, and then they invest with other people who are leading separate rounds and separate investments. This ensures that no angel is overwhelmed by responsibilities towards startups, and usually they have 1 or 2 startups per year on their hands.
And finally, if I have to ask, in an interview you mentioned that starting a startup was like going down a rabbit hole. Why is this? Could you expand on that a little?
Well, if you look back at Alice in Wonderland, which was a very interesting book that I think touched a lot of people, when Alice goes down the rabbit hole, everything becomes absurd. All norms and all things that we expect to be go out of a sync with reality, and everything needs to be set aside, and you need to take things in as they are. That generally involves everything from commitment, effort, stress, responsibilities, drive, passion, so on. All of that goes out of whack. And when you go down a rabbit hole, you don't know what to expect, and that's basically what it means. Don't go into a startup thinking that there's anything that's under control. It's completely outside of your control. Your best strategy is to build the right kind of environment, team, and structure to be able to manage all that chaos.
And when investing in a startup, do you think investors should know the founders well? We spoke earlier about assessing the team. Should it be a long-term relationship, or can it be a much more off-the-cuff, short-term contact?
The lead investor should know the entrepreneurs well, not necessarily long-term, but have spent enough time with them to get to know their characters and get to know their dispositions. But the co-investors, not necessarily.
And do you think sector knowledge is very important?
Most leads tend to have sector knowledge, yes. Is it necessary? I'd say for first-time angel investors, it may not be, but you want to ensure that the entrepreneur knows what they're doing. So maybe you won't have sector knowledge, but you will ensure that the entrepreneurs have tremendous sector knowledge to make up for your lack of sector knowledge. And
we're going to move into a quick fire round now, where I say a word or short statement and you give me your immediate thoughts.
Sure.
What's your favourite angel investing resource, book, podcast, blog?
Oh, wow. That's a tough one. My biggest inspiration has been Band of Angels.
Okay.
Which is based out of California, and I think it's one of the oldest angel networks in the world.
And then, turning back the clocks, if you could make an angel investment in any company before, what would it be and why?
Well, that's like playing the stock market. I mean, the company that had the highest growth in the shortest amount of time. It could be anything from Instagram to Facebook to Apple back in the day. I mean, angels are in it for the journey, but also for the return. Yeah. Any company that I could foresee to make 100x return, I would invest in blindly.
And then what's the most challenging aspect of being an angel?
Making sure you don't get too emotional, because I think the problem with angels is that they're so close that they can get emotional, and once things get emotional, the divorce can get messy.
And how long do angel investments tend to hold for? We hear about the VC founder relationship being a 7-year marriage. How long does the angel founder relationship tend to last?
It depends on the environment. Some angels are able to move in as little as 3 to 5 years. I would say it's a lot geography and maturity of the ecosystem. So 3 to 5 years maybe. but some may stick it out through the lifetime of the VC. So that could be up to 9 years, depending on when the VC gets involved.
And what sector do you think is next to be disrupted?
Oof, that's a tough one. I don't like the term Internet of Things. I think that's just a sexy word that people are throwing around. I think one of the things that we're going to become, I think energy at the pace it's evolving, especially with what Tesla is doing and how the big car manufacturers are responding, and oddly enough, the way these very large institutions are now entering new markets that they had never ventured into, such as Mercedes announcing that they're doing household battery packs, similarly to the Tesla's Powerwall. I think that's going to result in very dramatic renewable and clean energy disruption that we have never seen. I've never seen before.
And then finally, your most recent investment and why you said yes.
My most recent investment was an investment made from the hip that was a co-investment with some good investor friends of mine. They did the due diligence. I trust them, and I co-invested with them. Sometimes you co-invest simply because you trust the people who are leading the investment. It doesn't take a lot of thinking when you know that these people are very high-caliber people.
Well, Samer, thank you so much for coming on the show. It's been an absolute pleasure having you.
Thank you.
As always, the article on today's show, titled Why Startups Fail, can be found at www.syndicateroom.com, and we would love to hear what you think of the show, so please do let us know on Twitter at SyndicateRoom. We would be so grateful if you would leave a review and subscribe to the show, and we look so forward to seeing you in the next episode.